Joining me now from Odlum Financial Services is Murray Leith, Vice President of Investment Research. Murray, what is an ETF? Are they any good?
Yeah, they're a low-cost and quite effective way of getting exposure to an asset class, be it a stock or an individual sector of the market or commodities, bonds, you name it. They've become quite popular, and you can replicate almost anything through an exchange-traded fund.
Is that what an ETF is then?
That's what an ETF stands for. It's similar to a mutual fund, except that it trades on a stock exchange. So whereas when you buy or sell a mutual fund, you get the net asset value at the end of the day. An ETF trades throughout the day, so its price will fluctuate. Much lower costs than, they're a passive investment, replicating an underlying stock exchange index, whereas a mutual fund would be actively managed, and hopefully an actively managed mutual fund will beat the underlying benchmark, but you pay a fee for that. So an exchange-traded fund charges much lower fees and can be quite effective in that regard.
So what are the benefits, especially for those of us moving into our 60s and 70s? When would we want to use an ETF?
For most of our clients, we'd recommend, stock portfolios or actively managed mutual funds, but they can be quite effective if you want exposure to a particular sector, like precious metals, for example, a low-cost means of getting exposure to that, or say a particular country. After the earthquake in Japan, Japanese stocks fell a lot. You might not know a lot about individual companies, but feel that the market's overreacted. Well, you could buy a Japanese ETF.
Easy in, easy out.
Easy in, easy out. And they can also be fairly effective for tax planning. During the 2008-2009 financial crisis, people would have had losses on a lot of individual securities. You wouldn't want to lock in those losses, but you might want to get the tax benefit of registering a loss. So you could trade out of the stocks and buy an exchange-traded fund that replicates the underlying stocks so that you're still in the market, there for the recovery, but you've been able to crystallize a loss and get the tax refund from the government.
Okay, so if you're considering an ETF, is it a good idea to work through a financial advisor?
Yes, it is. There's actually a lot of them out there. Some of them are leveraged. Some of them allow you to go short the market. Those aren't the ones that we typically recommend to a conservative investor. The more plain vanilla, go long an equity index or a particular sector or asset class like precious metals makes some sense for individual investors.
Okay, so if you're considering an ETF, always a good idea to go through the subtleties and specifics with an advisor.
Well, absolutely. It depends on your sophistication and comfort with the markets, and for a lot of people, it does make a lot of sense to discuss these things with their financial advisor.
Always a pleasure, Murray. Thanks so much.
You're welcome, Michelle.
North of 49, a guide to the rest of your life.